What is a job cost report? A job cost report, in short, is when you stop managing your business by just guessing. Your profit and loss statement tells you maybe how your year went, but a job cost report tells you how the job went that led to the profit and loss statement. In other words, the P&L tells you how, the job cost tells you why. By the end of this video, you're going to understand how a job cost report gives you radical clarity in the micro so you can understand the full scope of your construction business in the macro. Last year, I went to get my physical, went to the doctor. It's always an uncomfortable moment, right? And I walked in and I had a little cough. I had something and people around me had the flu at that point. So I just walked in and I was like, hey, I just want to let you know I've got a little cough, and people around me had the flu. Oh my goodness. You would have thought we were back in the pandemic. The doctor and the nurse ran and got their masks. The doctor barely touched me for anything. And I had the most lame physical I'd ever had in my life. And basically all the doctor did was take my blood work, look at it and go, everything looks great, handed it to me and walked out. I'm like, you've got to be kidding me. Like, on that sheet of paper is a pretty deep diagnosis of everything that's happening inside of my body that I cannot see. That's a job cost report. And so when we can look at this report and basically draw blood out of a particular job and start to analyze that blood on that job. Hey, don't be like my doctor and just kind of wing this stuff and move through it and be freaked out. Instead, let's go deep. Let's analyze job by job if you have profitability. And the good news is you can do that with a system. So I want to talk to you about a job cost report, but how it relates to the larger system so that we can understand health or a lack of health in the business. Let's face it, in a construction company, it's really easy to look good, have the big trucks, the wrapped trucks, the logos and everything. And so it's easy for somebody in your town to drive by you and go, man, that guy's crushing it. And you look back at them quietly and go, no, this thing's crushing me. I don't want you to be in that position, and job cost reporting can help and understand the basics of accounting. So I'm going to make this super simple so that if you're a high level of doing this in your construction company, it'll be a really good refresher for you. But if you're at a level of understanding that you don't quite get it, I think this is going to be really helpful because I'm going to make it very simple. First, let's talk about the job cost report. Super simple. Basically, if you look at a job cost, which is a rear-facing report, so we're looking in the rear view at this point, it's basically made up of this. The contract value of a job is represented by that box there. Then we suck out any cost of goods, and I'm going to show you what that cost of good mixture is made up here in just a second. And what's left is what we call our gross profit, and that's how we pay overhead and all this other stuff that comes in the business. All right, so very basic in how we're looking at a particular job. So we get job number one. So let me put that down here. And job number one is a contract value of $1 million. Well, out of that $1 million, we got to take the cost of goods, which is made up of the slime. What is the slime? Super simple in understanding job costing. We've made it really easy for you. The left side of the slime right here is the people side. The right side of the slime is the material side. So there's my little bucket holding materials right there. All right? That's pretty good artistry, I think. So we've got the people side and we've got the material and equipment side. So it's really simple. When you're looking at a job cost, take the contract value, in this case $1 million, and we need to reduce or suck out subcontractor cost, labor cost, material cost, equipment cost. So your subcontractor is pretty straightforward. That's any subs you use to get things done on the job that you had to hire out. A labor is very similar. In fact, some contractors actually merge these two together, or you can keep them separate. But labor is usually non-formalized subcontractor. You may just have somebody come in and do a quick little job seasonality-wise, and then they move on. But either way, we've got to account for them in the cost of that actual job because it takes away from the gross profit that we have on that job. Now, the right side, or the non-people side of the slime, is material and equipment. So material is super easy. It's the hammers and the nails and the materials, the pavers and all that stuff that you would use. But the equipment is a little bit more complex because sometimes you own that equipment, and sometimes others own that equipment. So maybe a rental agency or a Sunbelt or somebody like that owns that. Well, that's pretty straightforward because you know what that cost per hour or mobilization or day or half day is going to be. But when you get it from yourself, a lot of times we own it because we think it will make more money on it when we do it. And many times it actually costs us more. Why? Because it wasn't profitable? No, not necessarily. It's because we weren't tracking it and we were actually underutilizing it and overspending for the utility of what we thought. And so in understanding our equipment, it's important to note. So a little side note, sometimes you want to talk to your accountant and understand, should I own my own and put it in an LLC or keep it in the business, or should we just rent and what would be more profitable. And they can help you run an analysis on this. But be careful. Sometimes the easiest analysis to run is the one you can do yourself and understanding what all this is. So contract value $1 million. We suck out the cost of goods, and that mixture is made up of our slime, subs, labors, materials, and equipment. And what's left over is the gross profit. And so that tells us the generalized profit on a job, gross profit, but it doesn't tell us the actual profit on a job. Still, for that, we need to suck out another layer of our overhead, of everything that comes out of that. And then and only then can we understand our EBITDA. Sorry for large words, but earnings before interest, tax, depreciation, and amortization. And so out of that, we might get this little corner in profitability, but that corner right there is very important to understand. And so job cost is a rear-facing look to see two things: our estimated expenses and our actual expenses. So when we put estimate versus actual, we understand the job cost differentiation. Now, I want to bring in another term, and I don't want you to freak out by this, all right? You don't have to be a hardcore CPA to understand this, but you do need to understand in some forms of construction businesses that many of you should be running what they call a WIP report, or work in progress is what that means. And so you'll hear a lot of accountants in construction space talk about work in progress accounting. What is that, and how is it different from job costing? So a job cost report looks backwards as to what was based on your actual versus your estimated. A WIP report, or work in progress report, is actually looking forward. So these up here are jobs closed. These up here are jobs that are still active. And so work in progress is tracking to see, is your billing keeping up with your spending at the same time? So this is really kind of a cash flow issues we're looking out. So if you hear the term WIP billing, we're looking forward to open jobs, and we're trying to see if our billing is keeping up with our spending. And so let me go back. We're doing a project at this little agricultural building that we have right now. We're having a guy build a little room in it. And so I showed up the other day, and guess what's on my driveway? A package of 2x4s and 2x6s and all the material he's going to use. Well, guess what? He hadn't gotten payment from me yet. And so WIP billing is essentially looking at him as a contractor. What has he billed versus what has he already spent? Now, he might be in a situation where he's on credit with the lumber company. So he hadn't spent that technically yet, but he's racked up a credit for it. Well, his billing cycle is going to be very crucial to the spend. So let's say he did spend money on that package, but has not billed me yet. There is a delta of cash there, and he's on the losing side of that cash right now. And so WIP reporting helps us to understand in open jobs what the delta between our billing and our spending is. So it's important to understand job costing is looking in the rearview mirror, but WIP billing is looking out in front, and it will help us to inform our job costing, and particularly with cash flow in that moment. But the thing I want you to remember the most is the job costing. If you can get this done right, even if you're a little bit iffy on this over here, if you can get this done right, it's going to give you incredible information to understand the health and the well-being of your business. So you're not like my doctor just giving me a blood test, putting your mask on, and going out of the room at that point. Now, I know some of this can be a little bit overwhelming. I don't want you to be overwhelmed. So here's what I want you to do. There's a link in the description below that if you go click on that link, I promise you will gain tons of value. Why? Is because you're going to see where job costing and WIP billing are all a part of a greater system that you need to build your construction business. So the title of that is How to Build a System for Your Construction Business. And I promise if you own a construction business, you need to go watch that video and walk through it so you can learn where to properly place the job costing process and properly place the WIP billing process, and then use them over and over and over again. So I'm going to give you the biggest gap on either one of these that keeps contractors from actually doing the hard work of this. And it's right here in the middle. And it's actually doing the work. That's it. So we can build the system, but if you don't work the system, then the system won't work for you at that point. And if you're stuck in chaos, that's where we don't want you to be. We want to help you build a business that can run and grow, whether you're there or not. And in doing that, you'll be liberated from chaos to make time for the things that matter most.